Hello and welcome to Macro Mondays presented by the Goxteen News Network. I'm your host, Landy, and today is October 20th, 2025. And we did see the low set on the daily, actually. Now, that doesn't mean it's going to be the low of this move, but we did actually see the low set on Sunday's candle closure for Bitcoin here on the daily. And that low of the actual move coming in perfectly on a 1272 fib extension from the prior cycle. Basically, that's just that it's 27.2% above $69,000 from the structure at $69,000 to the $15,500 low of the prior high to bear market low of last cycle. And in this case, nice place for a bounce. And we have now seen that low set. And you'll notice that I have some color-coded lines here. This is actually done by a free indicator that you can get through TradingView, just called the HFT liquidity levels. And I've color-coded it custom for myself. I'll explain this really quickly. There is, I call these, this is essentially just pointing out the daily and weekly swings in trend. So you can think about those as like the wicks, right? And in this case, we have the green and the red are untested weekly levels of liquidity. Now, we did have a confirmed lower high on the weekly, and that confirmed lower high is now, well, actually, is that a lower high? Let me go look. Yeah, it is a lower high, right? Yeah. Or no, it's not a lower high. Sorry, it's a weekly high. Sorry, it's a lower high in the daily. I'm getting a little ahead of myself here. That is a weekly level, so it's last week's high. And it's untested liquidity, meaning that price has not returned to it to grab that liquidity. When that happens with this particular indicator, you'll see that this will no longer be on the chart. Essentially saying, that either price has passed it and then come back down, or price has passed it to go on to hit other levels. To the downside, we also have untested weekly liquidity in bright red there. So one right there, directly on the 1272 fib extension, essentially right there at the low of the daily and last week's weekly low. And then there's subsequent levels below it. Of course, lining up with our zones that I've talked about below, down at 101 to 98. And that's, of course, is going to coincide with dailies, right? So as they're untested, this turned into a weekly low structure. So we have some major areas of interest directly overhead, and that's going to be right at that high, which is the lower high in the daily and the weekly high of last week. So because the weekly higher high is in, and this is just the last weekly high that has not been yet tested. And if we see it close over that on the daily, of course, this would break the downtrend, as this is the last daily lower high. And then, of course, trading above last week's high would look good for the bulls to at least test up a little bit further. Now, I don't have the zones of interest on the chart right now, but if you've been watching my content, anytime since price has been up here, it's 116 to 118 essentially. And then we have the next area of untested liquidity to the upside and the downside for the daily. So weekly is red and green. So we've got, of course, the all-time high up there. We've got last week's high on the weekly, and then we've got last week's low, and then we have some prior weekly's low from weeks past when Bitcoin was trading in the 112 highs to that 98 to 225 low. And that, of course, is just below where price is. Price did close back inside of the daily and weekly structure up here, which is a positive thing for the bulls. We need to see structure change in the daily, but let's get to these liquidity levels on the daily. We have yellow overhead liquidity that has been untested or swings on the daily. And then the orange here is the lows, or the liquidity on the lows that has yet to be tested, of course. And I just want to point this out because typically we can derive kind of what's going on, right? It's just another view of candle structure on the high side and the low side for the dailies and the weeklies, and what has yet to be tested, and kind of what areas of resistance or swing fails could potentially look like. And we can see that, of course, we have two dailies just overhead, right? We have the 112, which is right on, it's bang on this weekly high over here and daily high over here. And, we got close to it in the Monday session, but did not actually test up to that daily. So you see that price pulled back and closed at the 110.5 or so, just above 110.5. And now we have a little bit of liquidity overhead that can be grabbed. So the reason that I point this out is when you see that we have like larger untapped liquidity overhead and down below, and then you can see where the daily liquidity is, and the lower term timeframes that can help us, kind of get a bias as to where the liquidity lies on the charts for potential reversals, or if price slices through where it's the next bigger area it's likely going to go. So longer term timeframes are going to be more important, in terms of areas of liquidity, and then some of the shorter term timeframes. But you can get some bias on direction as price, either heads up or heads down towards some of these areas of interest. And it is a handy indicator to have. If you've heard me talk on spaces, I've talked about liquidity zones of interest, and it's really just the swings in trend. That's really what it is. But then you can get more granular even within that trend, like where the highs and lows of the candles are, and this indicator can help. Again, if you do want to throw that on your chart, it's really simple. It's just HFT liquidity, and you just type that into the indicator search tab and you can get that. I just want to show that because I put out a chart and then I got a few questions about it over the weekend. I think it was Friday, maybe Saturday I put it up. And I had quite a few questions about it. So just want to kind of point out what's going on there. And we're going to get right into some of the important stuff that I think we should be paying attention to this week, and some criteria and conditions to look for. All right, so very easy from here. There's a few ways that things can play out, right? Bitcoin, if there is enough momentum and price in the lower term timeframes cooperates and continues up, we need to see, for the bulls, we need to see a downtrend break. So the last lower high there, 116, which is confluent with a major area of interest, of course, just overhead. And that's essentially the bottom side of this tighter range over here. There is the deviation just below it at that 114,750. And that's going to be another big area, but that area has been tested. In fact, right here on the way up, it was right around this area. It tested right down into the bottom side of that area before losing it on the way down. But essentially, we need to see a trend break from here, or we need to see a lower high that can hold the last low, preferably on a close there at the 106.5. So this is kind of what I'd be watching for. And I'll be honest with you, as long as Bitcoin is closing above the swing low here at 103.5 or so, it's more likely going to try for a trend break or an upside move to a trend break either here, or if it puts in like a lower high here and then tries later with a higher lower equal low structure, that would look fine. But I just kind of wanted to play this out for you. What we're looking for is essentially something like this, either from this current move, let's say it continues up, a trend break, right? And let's go ahead and actually put an arrow on that. So looking for a trend break. And then it's really all about the next move down. It doesn't matter if it trend breaks or breaks the downtrend in this case. It doesn't matter how high it goes, because it's all about the next move down and where does it find the next low. Is it going to be a higher low or equal low as it relates to this low over here? Preferably above the close of the low, but the swing is fine. It's just that we have to watch out for just choppiness from there. But essentially, like a clean move right from here to take out this last lower high, you'd be looking for something like this, and then it's all about the move down. Right? Is it going to be higher, low, or equal low structures that relates to the close or the swing in this case? And if it's able to put in a higher low, then we look for it to confirm that trend reversal setup, right? So wherever it puts in the low, that's the trend reversal setup. And then the confirmation of that setup would be back above wherever the higher high comes in, right? Because you have a downtrend break with a higher high, a higher low, wherever it forms the candle, the closing low here, that's your trend reversal setup. And then confirmation is back above the new higher high in this case. Now this is, you prefer to see higher low or equal low structure, whether it relates to the, no matter what, it relates to the actual swing low, preferably above the close. But in reality, it's higher low or equal low structure. Another way that this could potentially play out is if it is going to be a bullish reversal of some sort, would be to look for this to come. Yeah, okay. Well, let's actually not do that and say we did. Hold on a second here. Can I actually adjust this? Yeah. So another way to look at this is like, okay, maybe it comes up and it teases the bottom side of some of these ranges. Let's say like right there. Lower high, a little bit closer to price action, and then tries to higher low its way out of here. That would be a lower high to trend reversal setup, trend break. So that's the other scenario to look for, is like we get another lower high and then it's all about this last low, right? And that's where we look for a possible higher low or equal low setup. This would be an equal low on a swing, maybe a close, but a higher low as it relates to the actual swing low over here, or, an equal swing lows, your W patterns. I mean, both would be kind of a W anyway, but, a higher low or equal low setup, this would be a lower high, and then you look for a trend reversal setup that then breaks the downtrend. So any kind of higher low close or equal low close would be the reversal setup. And then you break the, that's where, I'd be bidding more heavily if I wasn't already bidding the weekly zone down to the 101 to 98 level, which is what I'm currently in, as I stated on Friday, as I hedge against my swing short position, which is still open, by the way. But in this case, that's the other scenario that bulls are looking for. Otherwise, what would potentially happen? Well, it results in another lower high, and then we look for, the bears want to see it take out the low. So the bears are looking for a lower high and then take out the last low and continue down, right? So that's where, of course, I've mentioned that I'm looking for, 101 to 98, which is right in and around this area down here. So I'm building my long swing or swing long position, which I have, I'm looking to build it all the way down here, and I'd be willing to let that go, if need be, if it breaks below this zone and goes for the next bigger areas of interest, mid 90s to upper 80s to $90,000. Now, of course, I've stated that is not the position that many are in. A lot of people miss the move down. They're very bullish at the highs, and likely very sad that price has gone down when they really should be identifying opportunity. And in this case, I'm hedged against my short position. I'm not fully hedged yet, but it is a hedge against my short position. And then if I see a structural change, like a trend break and then a trend reversal setup, I'm willing to close that short position after a confirmation of a reversal setup. So I got a lot of questions actually about that. So let me actually cover that real quick here. So when would I be getting out of my short position? Am I going to get out of it because it breaks trend? Like, let's say it does something like this and then it breaks to the upside. Am I closing that short position? No, not necessarily. Not unless it's going to get very close to my entry, in which my stop loss is in profit. I've already taken profit on this short position, but I'm not willing to close that position until I see the trend reversal setup and then confirmation. So if it comes down in a higher low, I continue to position on the long side. If it puts in a higher low, that's the trend reversal setup. Even if it breaks trend or doesn't break trend, that's the trend reversal setup. And then on the confirmation back above a higher high or higher low that results in a trend break, that's when I would be getting out of that short position and letting the long win. But I just wanted to cover that real quick. It's pretty simple. It's essentially, this is like an expanding wedge structure on price action. See the lower second standard deviation is now at about $103,000. Let's get into some actual TA here and kind of see where things are going. Might help if I didn't have so much other crap that I was doing on the charts here, but let's go ahead and talk about this a little bit. So we'll move to the weekly, and I know it's going to look like a mess, and I apologize, but lower first standard deviation tap. We saw Bitcoin dip into the lower first, lower second zone, but not close below the lower first, and that was at 109. So we did get our close, or I'm sorry, 108. This is the last weekly high or low. I said bare minimum, what did I want to see Bitcoin close above to give itself a chance to test up towards 112, especially, was closes above 107.250, closes above 108.250 right there, the bottom side of the weekly high or low close. That's what I'd be looking for to break back into 109 all the way up to 112. If we see 112 getting broken above, where are we looking next? Daily area of interest overhead. This is 113.5. We also have the 114.750 on the daily, but another big daily area is 113.5. And then we look up to the 114.750. That's kind of its own zone before getting to, I think, right after 114.750, it's very easy for price to go and hit 116 to 118. Anywhere above there, beware of the upper first on swings, but any closes above 118, and I do think 120 to 121 is fair game again, and you ain't pushing shorts out anywhere below the 123 to 125 zone. That really does need to be recovered to get shorts to actually reposition much higher. They have cover all the way to the highs, so that would really, it'd be tough to push shorts out anywhere below, I would say, 123. They start sweating around, the shorts will start sweating around that 120 to 121. It really ain't pushing them out of position to have them build higher until above 123 to 125 up here by the upper second. Any closes above there need to meet the criteria of closing above the all-time high to get expansion. Next area, of course, we're looking 128 to 130 up there by the weekly upper third standard deviation up there. And then, of course, we're looking for expansion mid-30s, and then 138 to 140, 148 to 150 are on the table for longer-term time frames. Any breakdown below the lower first and losing the 107 low, going to bring the 105 area right back into play down to the 1272 by 103.5. And again, 102.5 is going to be another big area. Of course, that is a monthly close open, but realistically, the liquidity lies where? Lies 101 to that 98,225. That's where I would expect price to start hitting, even if it was just on a swing and he closes below the lower second, would have to break all the way down below 98,225 to actually get weekly expansion to the downside, which I think, unless we see something, catastrophic happen in the market, a lot of liquidity was wiped out. So I need to see that build back up in a really big way. For Bitcoin to take such a big hit, by the way, $15 billion in open interest liquidity, which is probably being nice or generous. There's probably more than that because you have to, that's not counting like perp dex liquidity and any kind of liquidations there for contracts. We're probably, I wouldn't be surprised if we washed out 20 billion in open interest on Bitcoin alone. That's not crypto market whole. Remember, we shed about $1 trillion in market cap value for crypto. So, it's being very kind to call it even 20 billion in open interest. I suspect there was probably more leverage in the market than that. And that's, not even talking about leverage on the other side, traditional marketplace, for the spot side on various ETF wrappers and different products that are out there for leverage. So, what does that mean? That means that it's crazy. It's wild how much liquidity was wiped out on Bitcoin, just Bitcoin in leverage. And it's it still has maintained a close in the range. It's wild. That's wild. That is strength. And if that can maintain, it would take a lot more build up in leverage for it to really push down to those other levels, or a lot of like big exits on the spot side. Of course, that would wash out more liquidity, likely on the traditional market spot side of the trade. And that's what I think it would take to actually get it to break down in an expansive fashion below the lower second and the actual low at 98,225 to go hit some of those deeper targets down below. So I would give it a chance here on the bullish side, and see how things play out. This is an ugly structure running the upper second to near the lower second zone here, not quite hitting the lower second directly, but you know, this is where, this although it was very volatile from the top to the move down, it was very quick and it washed out a lot of leverage. Kind of didn't do a whole lot, to be quite honest. We're just trapped sideways, which is reflected in the bands just showing like a range here. And we're just awaiting the next big move in Bitcoin, whether it's going to be to the downside and breaking down from here and to go test, further levels over here. And then, right around the tops there, which is confluent with the bottom here, and then from there, some sort of a concerted bearish trend really forming, because right now this is not a trend. This is just sideways crab walking in price action here. So nothing really too crazy or concerning just yet in terms of price action for the bulls' chances here. Although many would argue that the clock is running out Q4 to Q1 as macro time frame for liquidity cycles and in general and Bitcoin cycles. But we've got other factors, fundamental factors that have to be considered with Bitcoin, and the amount of circulating supply and the amount of buyers in the market on the spot ETF side, the amount of treasury companies with their consistently inconsistent bid, because you never know how much they're going to throw down or how much they're reserving onto the side for potential drops. So, if you are bearish, I wouldn't get too excited right away until we see some sort of a structure change, because that's what's going to cause the exits to be run for. Daily structure, like I said, just pay close attention to it. Either lower high, hold the lows, and then break that lower high. Trend reversal would be formed off of holding the lows and putting in a daily closing structure higher than this last low, and then break either a lower high, or from here go and break this last lower high at 116. I still need to see close above 118, because then things get interesting, right? Especially getting further away. The further away from this low, the better. For the bulls. So if they can go up, break this downtrend and then come down in higher low equal low fashion, that's the more preferred route for the bulls. And we'll see if they can do it. But as it stands right now, there's not too much going on. Got a little bit of a crossover there. We do have momentum shifting on the daily, but the weekly is going to be down, right? It's still down. Went sideways, rejected the bullish control zone after hitting it. By the way, it's usually not a good look with all this bearish divergence. Literally just confirmed, but the first part of the move already played out. For the bearish divergence, it's all about like continuation, and that would be below the low and then below 101 to 98. That would be your continuation of that bearish divergence playing out. Got rejected from the bullish control zone of a regular Stoke, but things aren't as dire as the timeline might seem, at least not yet. And the bulls do have a shot here. So I'm going to keep it on Bitcoin today. I guess, what we'll do? We'll go back. We'll go here and we'll take a look at Ethereum real quick. Ethereum obviously has its spot ETF, so we should go take a look at it. Daily, nice tag of the lower second. So you get the expansion to the downside, rejection at the highs by the upper second, right in a big zone of liquidity here, and then boom, down to these dailies, hitting that lower second, not really closing below, reject the midline perfectly, the basis band is 20 simple, and then come back down, tag the lower second. This is a reversal setup. In fact, this is a higher low confirmed. So it's a higher low confirmed, meaning this is the reversal setup confirmed. Doesn't mean much until we see the lower high broken up here at around 4,300. Then this reversal is confirmed. But I was bidding down here by this daily, so it is something to pay attention to. And now I'm still short from the overhead resistance here for Ethereum. I know I talk about Bitcoin a lot, but I took shorts across the market, and even in TradFi. And a lot of people are getting like shaken out of their short side of their position in TradFi because it recovered quite well and had a nice day, had a nice Monday. But it's not, when you're bracket trading and protecting your portfolio and protecting your positions, you just let the winner win. And in this case, the winner hasn't won just yet over there, but maybe if we see some strength there, we see some strength in crypto, and we get a possible trend reversal confirmation above. So trend reversal setup is already in. Trend reversal confirmation would be back above the last lower high. So, and even if we get another lower high and then we get a higher low equal low as it relates to this, then that would be the confirmation above that high. And then you pay attention to this area and then this area and so on and so forth. So nothing too crazy. Ethereum looks much better above, 4380 to 4400. That would look much better. And then you wait for the next big move down if you missed any of this for trending structure to really start forming. So yeah, there's opportunity. It's just about identifying it and coming up with a thesis for how you're going to trade it. And as it stands right now, Bitcoin's right in the thick of a major weekly around some major daily levels. And that's something that you do have to pay close attention to here, and then just watch that last low at 103.5 if things start to turn back around to the downside. So really need to see closes above 112, go and test that 113, this common line of resistance here that you saw, and even a rejection after putting in the lower high right off of our main area overhead here at 116 to 118. So big weekly area. Close above 112 would look pretty good for the bulls, especially on the daily. Again, closes are what matter here, not swings. It's all about the closes. All right, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. Please like and share this video out there if you did find this information helpful. And of course, I'll talk to you again on Wednesday during the Wednesday check-in. With all of that being said, Landy out. Take care.